Glantus Holdings is based in Dublin. That's where the man is tonight, and has a market cap of £29 million. It's a global provider of accounts payable automation and analytics solutions. It's a fintech of sorts. And after floating on AIM last year, Glantus has continued to grow both organically and by acquisition. So it's a genuine growth stock. The Glantus software recovers lost working capital. It improves efficiency. It prevents errors. Glantus connects all the AP systems and suppliers. It eliminates costs, and it delivers new revenue streams. It sounds fantastic. Let's hear from Maurice Healy. Okay, put it in context for us, Maurice.
Hi, Donald. Hello, everybody. I am very conscious that this is the graveyard shift and people are wanting to get on with their evenings. So I'll whip through this presentation for everybody. We are a technology company. We're based out of Ireland, but most of our business comes from the UK and the US, other parts of EMEA as well. We provide SaaS solutions that we've developed ourselves. It's all our own IP. We work with the accounts payable functions of global organizations. We analyze, automate, and digitize that function, and we provide them with working capital recovery as part of the offering. We only have two qualifying questions for these organizations. How much do you spend and how many suppliers do you have? Anything north of $500 million and suppliers anywhere from 4,000 to 120,000, then they're our sweet spot. We were founded in 2014, started rolling out our product, the early versions of it in 2017. We have a current run rate revenue of about $20 million. We IPO'd on AIM in 2021 in May, last May, it's not even a year. And it's still owned by management, 58% owned management. Why do people need our solution? Well, it doesn't really matter how sophisticated their ERP system is. We work with organizations who may have put SAP right across their group in all regions last year, and they'll still need us because even with one system, they've got multiple regions, multiple divisions, multiple ERP systems. Their data is siloed. They have several instances of these ERP systems, and they can't just get a grip on everything. So in the accounts payable function in particular, they lose literally millions every year because they can't get at the data as one unit. So we have a cloud solution that sits above all of their systems, all of their geographies. We take the data out, we put it through our systems, and we find working capital, but we do a lot more for them. We do it through a suite of products, which we call Discover, Delve, Flow, and Origin. But effectively, you've got to think of each product as just different flavors of each other. Each product has a suite of functionality. So we have an analytics suite. We do fraud detection, compliance and risk, and other anomaly detections, and we do recovery of working capital as part of all of that. So whilst we have them broken down that way, it's really where they want to start, but they can go in any direction from there. It's all driven by one platform, the Datashark platform, and we just offer the service in whatever order the customers wanted. You'd expect the compliance standards we have, because we're dealing with these top companies, we have the top standards. It is a strong team. We've had recent acquisitions. David Rosenthal joined us as Chief Operating Officer, and Diane Gray-Smith. I'll talk a little bit about her area in a little while, but Diane was a non-executive up to a couple of months ago, and she's moved across as an executive. So to help us to exploit our data in the fintech space, and I'll talk to you about that in a bit. We work in a sector that has a lot of different flavors. When we started out, before we continued to develop our products, we'd have been down in that bottom left corner doing a lot of recovery stuff. but then we developed the product, enhanced the offering, and now we've moved up through that quadrant. We're seen as innovators in our space. We've probably got the best technology. We are competing with people like Coupa, albeit we don't compete directly with them. We cross over in some ways. They do purchase to payment automation, we do that, but then they do more around payments. We do more around the areas of recovery and fraud detection and that type of thing. So we often live with our competitors on a customer site. So it's just the technology that we've developed that has driven us up through the rankings in these quadrants. Brian, you've got to kind of go forward one. I think I might have flipped the next two slides. So these are the companies that we operate with. It's these type of global companies. They're the biggest names you'll find around, and there's a lot more in the States that I hadn't even heard of, and they're absolutely huge. That's the kind of customer base we have. Those are the kind of customers we deal with, and they produce this type of data for us. So every year we analyze $1.6 trillion of spend. We oversee about 120 million payments. We have 300 customers, 120 are tier one, but working on the platform through our products are all their suppliers and vendors. So we actually have about 4.2 million companies that we are interacting with on the platform. And that's important as I come to the evolution of the product as we go forward. We provide the service across 50 countries, and obviously we're not in 50 countries, but a lot of our customers are in multiple regions. So we provide that service across all of their regions. Some of our customers are operating 12, 13 countries, and we will tap into their systems in those countries, extract the data, put it with everything else, and do the analytics on that data. So we have three ways of growing. We have our organic growth. There are two elements to the organic growth. We've got, as the products have developed, we've got an existing customer base that is still hungry for the advanced technology that we have developed. So we are working, part of the reason we raised money last year was to invest in account management and bring people in who could be trained up on our products and help us educate our customer base so that we can do more with them. Those teams are in place in the US and EMEA now, and we're getting a tremendous reaction from that. We then obviously have new customers. We have a very strong, experienced team. We get a lot of our leads from AP-specific events. Yes, those things actually exist, accounts payable specific events. They are very well attended by these large organizations and by the accounts payable people within these large organizations. So we do a lot there. We have, so we get a lot of leads from that. We do our digital campaigns. We tried external lead generation. We now only use our own internal lead generators, and increasingly now we get a lot more through referrals and just a lot more inbound activity. We work very hard with the customer experience and branding, brand recognition and positioning. We work G2 with a brand push there, a lot of thought leadership programs. So we're becoming a bit of a mouthpiece for the accounts payable industry. The second area of growth is partnerships. You'll be seeing a lot more of this. We worked the partnership program. We didn't get it right on day one, but we've gotten it right now. We know exactly the type of partners we want. And we're using partnerships as a way of growing geographically as well. Recently, we had our first partner in Canada and one in South Africa. And that program is continuing, and we treat it like any other sale. We are putting ourselves out there. We're encouraging inbound inquiries, and we're getting an increasing amount of those. But we have now very specific criteria for selecting partners, and our new approach is delivering a lot more for us. But again, it's early days with it, and we expect a lot from it going forward. And then we've got acquisitions. We are a very experienced acquisition team. We know what we want to buy. We know why we want to buy it. We've done it successfully over the last couple of years. We work with organizations, or we acquire organizations that are working with the same customer profile as we are, but some companies that our technology will add a tremendous amount of value to that and grow the EBITDA. So we're very focused on acquisitions. We always have a pipeline going forward, and we constantly add to that pipeline. So there's an evolution happening at the moment in the company, and it's an evolution, not a pivot. Those numbers I put forward earlier, as you look at what I mentioned earlier about what we do within each of the product sets. So we have the AP analytics piece, that's of huge value to these organizations. This slide kind of tells you a little bit about why we are so successful, because on the left you have the recovery of working capital, and that makes the ROI practically immediate for our customers. They're basically recovering money. So putting us in, you know, because we sit above their systems, they don't have to change systems, they don't have to train staff, they don't have to use internal resources. We sit above and we recover working capital for them, instant ROI. But on top of that, these organizations, with the number of suppliers that they have, they lose track of it. You know, when I said earlier, our qualifying questions are how much do you spend? They know that how many suppliers, they would struggle to tell us the exact number of suppliers. So our analytics goes in and cleans up that entire supplier ecosystem for them, and that's of real value to them. It means that they can become more effective and more efficient around running that AP function. The fraud detection, when we're going to customers, we give them an assessment report free of charge. We go out, once we get to the right people, we give an assessment report, and in that report, apart from a lot of other analytics, we also say, you know, of our 10 points of potential fraudulent activity, these number of customers are indicating that number of points. And in that way, they can then zone in. Out of 120,000, they might be zoning in on 18 who are showing 7 points, or, you know, a couple of hundred who are showing 6. But it means they can go and tackle that. The anomaly detection right across their piece, the number of vendors they have, instances of vendors, and you know, the way that the overpayments and open credits go missing, all that, we tidy all of that up in the anomalies. We're fully compliant in risk, and we help them with their controls to make sure that they are also compliant. And then we do the recovery of the working capital. And then this last bit, I forgot, I'm moving this on, but you've got you've had it there. So with that data we had earlier, 1.6 trillion of spend, 4.8 million, then there comes a point where we've got to start looking at that area and how do we exploit that. So Diane Gray-Smith, who has been a non-exec and knew the company well and understood it, her background has been working with fintech companies as CFO for the last 20 years. She's fully familiar with the space and what is required in the space. You know, it was great that, having worked with the company for a while, seeing the opportunity, she saw the same opportunity we saw, and so she joined us to exploit that area, and we're exploiting it in several ways. I mean, first of all, we've got to monetize that data, but we are looking specifically at the areas of supply chain finance, and there are areas of Forex as well. You see, what we've got and other companies don't have is this customer base. So when we talk about supply chain finance, we're looking at these large organizations who are our customers, and they owe somebody $1 million. and they're paying them in 90 days or 120 days. And there's a Glantus button will be appearing, and we will be looking at offering them terms. It'll mean us partnering with a bank, and we're working through that opportunity right now. It's not built into our share price, it's not built into any numbers, but it's a massive, massive opportunity. And we're different to everybody else. A lot of people in the space come along with a technology that they can say, we'll do that, and then they've got to find a route to market. We have the route to market. We already have our existing customer base in place, and we also have the technology. So it's a great opportunity for us, and we're exploring that, and hopefully we'll have news on that this year. And it's really important to us because as we stand at the moment, you know, our market cap, as Donald said, is 29 million pounds. The multiples in the States at the moment for companies like us working in this space, recurring revenue, our own IP, well, it tends to be at our level of 20 million run rate, probably 4 or 5 times revenue. As you grow, that grows. And then when you're combining that fintech, it's a hyper growth market, that fintech, the customer base, combined with that SaaS model, then you're up at 15 and 16 times. And that's where we're headed at the moment. All the time, managing our working cap, managing our cash, we don't buy just for revenue. We like to be valued on revenue, but we look at all stages about the EBITDA when we acquire companies. We look at their EBITDA and we look at how much we can enhance that EBITDA with our technology. So we are a profitable cash flow generative company working in this space, which is highly unusual, with a really strong customer base and this massive opportunity that isn't priced anyway. So we've enhanced the team over the last while since the IPO. It's a stronger team again. It's all our own IP. The product is unique as an offering to the AP world. We've already proven the demand. We have less than 3% churn every year, so there's a lot of customer loyalty. We know how to do acquisitions, and there's a massive opportunity in our space to do acquisitions and to bring value through our technology. And we've got strong growth already that can be seen. And then there's this whole fintech opportunity, which is, as I said, there's spectacular option value that isn't priced in anywhere, and we haven't done anything with yet. I think I'm about on the button, Donald. So thank you to everybody for listening.
Okay, I'll give you that one, Maurice. You're absolutely on the button. Thank you so much for that. That was fantastic. Okay, let me jump straight in and say, what does the next year hold for you, Maurice? Do you see more growth by acquisition, or tell us how you see it?
We always have a pipeline of acquisitions. There are a few large ones we'd really like to do, but our market cap at the moment, you know, most of these deals, there'll be a bit of equity and cash involved with them. You know, we're below the multiples we'd be buying at right now ourselves. So some of the larger ones we hope to do in H2. We're hoping to do a lot of work in recovering the share price, hoping the markets recover, and we'll have some good news flow going along with that. So hopefully as that goes up, we'll do the larger ones. We've got a couple of small ones that we're working with. So we're expecting hopefully to do a couple of small acquisitions. Partnerships will be a big part of what we're doing. We have a very strong pipeline. This is a very popular product for resellers in other countries. So we're going to drive forward with that program. And then we have the whole fintech space as well. So hopefully we'll be going to work over the next few months with a banking partner to provide the finance on that. And that's a really exciting area as well. So it's going to be a really busy year, but it's going to be a very exciting year. And as I said, we've strengthened the team, so we're ready to go.
Okay, you've got 4 different areas of growth. Would it be possible just to give us a very rough 10% this area, 10% this sector, you know, 80%, 10%? Give us a sense of how it divvies up in terms of growth through acquisition, organic growth, partnerships, and fintech.
Yeah, I won't do it exactly that way, Donald, because some of them are coming from a 0 point, so it look good. But we would expect our organic growth to be around 30% per annum as we're moving forward into that space. So that's where we're always pitching organic growth. The partnerships have not contributed in the last year, so we're expecting. Particularly in H2, we've signed up a few now towards the back end of last year and early this year. So we're looking for them to start producing revenue in the second half. So we haven't had that before. The acquisitions, well, that could be anything. You know, we're looking, as I said,
small companies, or if the market recovers, something a bit bigger.
Exactly. So they
possibly easier for me to say it than you.
yeah, exactly. So that's good. And then as I said, we haven't put any numbers out around the fintech. You know, in our own modelling and that, for a small percentage of the market, it's they're really exciting numbers.
And the fintech option is you providing your clients with lenders. Did I understand it correctly?
Well, we'll have a banking partner who'll provide the funding. So let's say, Donald,
nice.
Let's say, Donald, I owed you £1 million.
I like this thought.
Donald, there's no way you'd let anyone owe you £1 million. Let's not kid ourselves.
I don't have £1 million to lend you, sadly.
But if I owed you £1 million and I was saying I was paying 120 days, and then there was a button that said, actually, you can be paid in 2 days, but you'll take a discount of, just say 5%, whatever it might be, to do that, then the bank will step in and pay that money. We'll share that 5% between the bank, ourselves, and our own customer. The supplier gets paid, and then at the 90, 120 days, our bank gets the money from the customer. So it's a win for everybody. It's a really positive. And you know, it's that area of it isn't new. You know, there's a lot of people out there looking at that. What is different about us is that we actually have the customers and the customer base and those statistics that I put up there. So we're going to, and we've got somebody who's been working in that industry, driving it for us. And she's worked in that industry. Diana's worked in that industry for quite a long time, over 20 years. So she knows what she's doing. She knows how to.
She's a bit of an expert in the field. It does sound incredibly interesting, I have to say.
Yeah, no, it is. Now, we've always had that. We've always had the situation where we were growing organically, building up those customers. We're doing by acquisition, bringing them in. And we knew there was always going to be an opportunity with the data. I remember back, you know, well before even the IPO, and saying to people that, you know, that is still a kind of hidden jewel in what we're doing, all of that data and how we exploit
This has not come as a surprise to you. This is something you've been focused on for a very long time.
Absolutely. And now we're at the scale where we can actually exploit it properly.
Great. Okay, let's talk about another area of potential for you. Glantus in the United States. I know that was where one of your acquisitions took place. And that acquisition has been very helpful in terms of getting you into new business and so on, and you know, proving your brand in the States. So what else do you hope to do in America?
You know, all the areas of growth I spoke about, Donald, they're all providing opportunities in the US. I mean, the organic side of things alone, you know, the pipeline in the States, and the size of the companies, as I said earlier, I wouldn't have even heard of them. Like, they're bloody huge.
And they're massive, yes.
Yeah, massive. And we have a very strong pipeline. So we're expecting quite a considerable amount of growth in organic growth in the States over the next 12 months. And remember, for us, we're a tech company, and you know, our costs don't go up with the revenues, because it's predominantly, you know, 85% of what we're doing is done by what we do for the customer is done by the technology. So the more of that we can get, the more our margins drive up. So that's a big area. There are always acquisitions in the US, but the fintech piece over there is quite exciting, and it'll, you know, we'll probably, well, I can't say this for certain, but the funding partner You know, we're talking to a few in the States, but we are talking to a few in Europe as well. So it could come out of that. But all areas are very strong in the States. We expect, and we, you know, we're getting more inbound in the States as well, which is different because
you're getting momentum.
Yeah, the branding's got out there, and those events, I was saying, you know, we do quite a few of those every year in the States, and even in the last few months now, we've had two. Both of them are actually in Florida, but again, the output from that is really strong. The follow-up, the meetings, because what we're doing, you know, we're speaking to their problems all the time. And
do you find that the new branding, the very professional look, the interface that you've developed, the common branding throughout, is that all contributing to this success?
I think so. If you look at our brand, we are, you know, liberate, innovate. We're looking at. I think what we discovered is that within accounts payable of large organization, that's become quite, first of all, it's an important area in the markets. The markets are really interested in that space. But even within the industry, within the organizations themselves, they're becoming quite a powerful group because they're also a source of innovation. You can put technology in there. The likes of ourselves going in there is pretty much digitizing that function at no additional cost to anyone, because, as I said, we recover working capital for them. And so we're kind of, the Liberate Innovate comes from, we're liberating AP people, we're giving them a voice, we're talking to AP people, we're listening to AP people, and we're providing solutions for AP people through innovation. And they themselves then are helping innovate their organizations.
Have you ever encountered, Maurice, have you ever encountered a company where your system simply didn't work?
No, because you see, the top brands, you know, of ERP systems, SAP, I don't know what percentage, but they'd probably be well up in the majority. Microsoft's suite of ERP systems, all the major ones, I would imagine that we'd cover 98% of the major, of all the major, which would cover 98% of the market of ERP systems, we have APIs into, we connect to them, and so we do it. But even if we came across another one, and with large organizations, that's difficult to happen, though when they've acquired, we've sometimes found that there's some oddball systems in something they acquired. And again, once they can show us into the system, we can build an API fairly quickly. So we've never had to refuse a customer because we weren't able to extract the data.
You can develop a bespoke solution once you get in there.
Yeah, I mean, the solution is always the same. It's always about how you extract the data. Once we extract it, everything else is the same for every customer. The platform just does its thing. It's just the extraction of the data. And it's funny because you show analytics to customers, you show them the dashboards and everything looks fancy. And yet, I guess if you talk to our tech team, the thing they're most proud of is how efficiently and effectively they extract data faster than anybody else. And they've made a real job of it. And I think that's what they're most proud of, the tech people. Whilst, as I say, customers just take it for granted, and the dashboards and all of that excite them more, and the working capital.
Makes a lot of sense. Maurice, very briefly, news flow. What news flow can we expect from you in the next year or the next 6 to 9 months? And that's your final question. Yeah, no, I think we're going to have plenty of news flow. There's an RNS going out tomorrow, actually, but it isn't very exciting, but there's an RNS going out. We have a few things to do. We're going to be building up in the US. We'll be appointing a non-executive director from the US, based in the US, with industry experience. We're hoping to do that over the next few months. We'll have more partnerships. Hopefully we'll have 1 or 2 acquisitions. And then we'll be, I guess the next you'll hear around Fintech will be when we actually appoint a banking partner. So there's a lot to happen this year, and there'll be plenty of news flow. Maurice Healy, thank you so much for joining us.